Well, good day all. Ira Epstein, and here we are with your SPDR ETF wrap-up. And this wrap-up is for the evening of Wednesday, the 14th of September, 2022. I had a good night last night, by the way. I went to a Navy SEAL Foundation, the rough guys, the Navy SEALs. This is unfortunately a gathering where people come and donate for the families, the children of the injured and the lost Navy SEALs. But it was tremendous, and really tremendous. The who of Chicago was there. Ken Griffin gave $1 million last night. People were giving money. They raised quite a bit out of it. Got to see Mike Pompeo. He was there with his bodyguard and talking about that there's $1 million bounty from the Iranians on his head. They'd like to kill him because of America killing one of their generals. Okay, and he talked about it, but he was really an interesting fellow to listen to. Okay, I've heard many of these people over the years. I was impressed. He is certainly got his foot in the water. He's looking to see if there's anything for support for a candidacy run in New Hampshire, Iowa. I haven't heard that his name's really up there, but he mentioned that he's there, and he wished the president the best in his retirement time. Everybody was laughing, of course, at that. The host was doing it was the Ryans of Aon Insurance, a big, huge company. The chairman of Motorola. These are all Chicago people. They were here. They were the ones asking the question. It was a great forum asking the questions to Mr. Pompeo. I was impressed, and very much so, and very moved by the whole thing. Fun. Okay, and for a great cause. So now we have another element that's happening to the economy, and it's a hard one to play. The rail strike's right in front of you. It appears that it's not a pay issue, it's an absentee issue, I just read, and I don't even know what that means. So the unions are fighting over how much absentee time somebody gets or leave time. I don't know what it means. But it's already done its work, because if you try to take a train from the East Coast to the West, they've shut those down tonight. Chicago, we're on schedules for the Metro that comes in all the way from Wisconsin and other areas to us. Forget that. That's running on limited time. Freight lines being held back. They're not loading grain. They're not loading fertilizer now. They don't want anything stuck on these cars in the middle of nowhere that they can't do anything about. Now, Congress can step in instantly and end it once a strike is declared. And if they're smart, and if this is declared, they can both end it and they can force a settlement issue. I don't think they want to be in that going in the midterms. It works against them, but again, another headwind for the economy. Now, as for yesterday's break in the market, today you didn't have the follow through. So the damage was done yesterday. Now you're in the pause where the market's licking its wounds. When you get a rally, will you get the people saying, that was it, I want to buy? I heard that Kathy Woods yesterday was a major buyer of stocks. That I was reading, I think it was in Reuters, where they were talking about her purchases. And the problem is she's betting that the 3,900 level will hold. Now, I didn't see everything she bought, so I can't tell you that, what the individual stocks are. I can tell you that China, there's talk that they've already gone and they are cutting back the lockdown in place areas. In other words, people are getting out early out of those areas, and that's good news. But more important is that now Moderna shot up today. And it shot up in price because China is in talks with them about vaccines. That would be the big issue. I have been waiting to see when China would say, I'm going to go get Pfizer, Moderna, one of the Western medicines that work. Theirs doesn't work. If it worked, they wouldn't be in this situation. So it doesn't work. Now, Moderna and Pfizer will also, I want to make this clear, not prevent the spread of COVID. Work means most people will live that go through the COVID. That's what it means. It does not mean you won't get the COVID. So if China in any manner thinks that these vaccines are going to stop the spread of COVID, they're still wrong. It's the severity of it. I'm no doctor, but I know that. Go on the internet. You can read it over and over. Be wonderful if they could stop completely getting it the way a polio vaccine works. But that isn't how this is working. All right. Still an improvement. Did the market respond in a big way? No. All right, because it's the first inquiry. When we go to Home Depot, yeah, I told you I would change to this yesterday. I didn't know what to expect when I brought it on because I really don't follow Home Depot that much. Wow. This is one chart that got very ugly very fast. It, too, had one of these scenarios where you had the lower highs, and then when you broke that, you ended what I called the Jackson Hole break off the Fed chair speech. And you got a rally. And then you collapsed over the past, as you know, 48 hours. You had a two-day break that was, wow. So we come over here and we can see where did the rally actually grab its leg from. And it would be, and I'll just take you there because I'm not going to do this on every chart, obviously, but right here. So once the market on September 7th got over the prior high, that was the game. And that's when you had your short covering. And then we got the other part of the news. We had the CPI data, and wham, you go down. You had PPI data today, sticky as can be. Yes, it slowed down. Sticky slowed down. The core went up, actually, but the regular headline number slowed down. That is the problem we're having. People have to understand, and I've mentioned it to you here repeatedly, you can raise interest rates all you want today. It takes a while for it to get into the system. It's like today you hit 6% mortgages. That's going to put a lot of people off, okay? All right. It may put them off today, but there's an out around it. What do? Well, you buy a variable. And if the market drops enough to cover your costs, you get in a lower number, right? Who didn't do that back in the 70s and 80s when interest rates were going crazy? I was one of those guys, and that's what you would do. So there's nothing new about the game. The players are new. The game is the same. Keep that in the back of your mind, too. So we got through that, and you can see where you're at. You didn't even bounce today. A lot of resistance, oh, yeah. A big problem for the market, oh, yeah. What is that problem? You're about to get a bearish crossover where the 18-day average of closes is going to get under the 100 in green. You're not far away. And if you do that, you're just laying up layers of resistance. And I know you're going to tell me, Ira, it's going to come back and blah, blah, blah. I'm a chartist, that's all. I don't care what the name of the company is. That's a real bearish thing to occur on a chart. But where is the market? The good news. There is a piece of good news. Yesterday, if you take a look at the low, 277.32, you got right into the Bollinger Band, and you're still basically holding that area. That's the only good news. Does it mean you can't just keep drifting down? No, it doesn't mean that. All right. Is this market bearish? Well, it's not bullish, but I didn't say it's bearish because it does have a higher high and lower low. That is not a trend. This is a washout phase, and you're oversold, not embedded. Okay. You've taken all the fun out of the market and destroyed another nice chart. Where did AMC temporarily run into the problem? You've had your short covering rally. You got back to the 18-day average. If you don't see it, I'm shocked. That's all it was worth. Now it's trying to decide the next move. If it decides to rally by clearing 1075, I could argue then you'll get up to between 1410 and 1396. If it decides it wants to come down, it's got to take out 789, and then wherever that Bollinger Band comes in, that'll be it. More important, something else. What do you think that something else is? Look at how narrow the black Bollingers are. All the volatility is coming out of this market. It's just going to lay here, I think, and die. I didn't say out of business. I said die. Probably not going anywhere for a while. In Apple, well, it's pretty clear what you did. You ran into resistance between the 200-day average and the 18-day. And on the way down, you came from, so this happened first, coming from the 100-day up there and then pulling back, all right? Obviously, this is a rough economy to go out and sell $1,000 phones. every review I'm reading is giving reasons to maybe not buy the 14. I'm not talking the pro version, the 14, and step back and get the 13s. Read the reviews. I'm pretty surprised at what I'm seeing. I'm thinking about it myself. Okay, maybe that's the route that you go with it. I need a new phone. I've got a 10, so it is time to get one. But the money's not burning a hole in my pocket, believe me. Mine's working just fine. I have the operating 16 system on it. Had glitches yesterday. They seem to have gotten worked out today. In Disney, higher high, lower low, no trend. I think it's caught between the lower band and the 18-day average. Nothing doing there. XLF. We have a theme here. There's just nothing going on in the market. Lower lows, higher highs. Spent 2 days over that and bang, right back under it. Do you see a trend in that? If you do, write me because I don't see it. XLI. I don't see a trend here either. I see a market that had an embedded reading, lost it, went right up to what I teach in my course, the 18-day average. Didn't even have time to decide what to do because the CPI number came out and just killed everything. So you're getting delayed reactions on some of these markets, trying to figure out what to do with them. In the semiconductor, ultimately I'm very bullish the semiconductor business, especially excited that we're bringing it back to America. The one thing that Biden, our President Biden has done right, he got behind these companies, and I applaud that. I knock him all the time. I knock his officials around him, but I'm also very capable of saying, yes, I think you made a great move. I think China's going to reel from this, and why aren't we in control of our own destiny? Now, the companies that we're helping to get this done have to prove that we did the right thing. They can't turn around and gouge us. They have to be competitive on the world market so that they're an exporter of this technology now, besides supplying it at home. They'll get that done. I think they're bright. All right, the home builders. Well, like Home Depot, big problem. Now you're going back in, and what are you challenging? You're 6 cents away on the low from the lower Bollinger Band. You're oversold. Again, it's going to take the better part of probably through mid next week before you get a lot of setups that you're going to get comfortable with here. Energy's one of them that I like right now. I think the pros are buying the 18-day average right now. I think they'll get disappointed and out of the market if you hit 79.64. And I think they're looking for the market at 84.54. I think I'm liking what I'm seeing in the energy complex. Why? Well, the strategic reserve is going to end probably sometime in October, where we stop taking out 1 million barrels a day. We then got to replenish it. So that oil is not going to be on the market. And then when we replenish, we're actually becoming a net buyer. So we shift from supplying to buying literally 1, 2, 3. That puts a floor in sorts under the market. This is why OPEC thinks the market's schizophrenic in its own ways. You look at what's going to happen and where the supplies get hurt, that's it. Now, the big unknown is if the U.S. stock markets go into the tank further and really start going down for those June lows, well, how much oil do you need? All right, people will back away saying we don't have the business, and that's the thing. It's the demand you get from an economy that is doing fine versus a contracting economy. There's certain things you can't worry about. You're going to have to heat homes. You're going to need fuel to do that. I don't care if it's natural gas, diesel. It's going to be something that people are going to use in order to heat their homes. That demand is coming back, so be ready for that. When you look at gold, the gold miners are sitting. You get bearish this chart on any move under 24.35. To me, it then looks like 2300's in the cards. Copper is just neutral as can be. Why? I'm going to repeat. I think I now understand what's going on. Between China talking to Moderna to get in the vaccines, and at the same time, I'm reading announcements where they're releasing early areas that had the COVID, and they're finding ways to give some of the release that can bring back on their industry. They have to do some type of stimulus for the industry and for the property market. I don't know what it is, but October 16th is coming. We're already at the 14th of September. The 16th is their party Congress. Some of the old timers that have been, I think, very level-headed will be gone. Mandatory retirement. And who they bring in, that's going to be the wild card. Are they party people that are just going to go back to what they were doing, or are they going to be a bit more progressive? No way to know just yet. In TLT, if you get the red line over 20, it's flirting, it's not there, but if it closes over that, then I can see a reaction back up for a run to the 18-day average. What are the pros doing right here, right now? They're trying to sell this market short. And if they sell it, they'll get out with that reading over 21, and otherwise you're going to look for 106.08. In the dollar index, you have the trend down, you have the bias up, and you're narrowing in dramatically the Bollinger Bands here, just the way you did in the futures, and the same thing in FXE. This has the trend up, the bias down as you're under that average. 40% of the euro makes up the dollar index. So they're almost mirrors of each other as you look at them. And you put it together, you try to come up with the game plan. Well, I have your game plan. We're going to have fun tomorrow because we're going to talk where? We're going to talk about what we do at my webinar. So I'm going to repeat. If you haven't got an invite from me on the webinar, just take your cursor, move it to the top up here. A white icon will appear. Give it a click. Fill out the form. You'll get your receipt with your user ID and password. It's free. There's no charge. In that receipt will be also my email address. If you have questions you want me to go with, send them to me now. Give me a chance to create the charts for you if you have charts you want me to bring up. If you have general market questions, you can ask that of me during the webinar. You have a question area, just type it in. But if you want me to bring up all these charts, again, I'm not Kramer. I don't have a staff behind me that is preparing the charts, and he can hit his funny buttons and do everything, and magically the chart with everything he needs appears. You don't think he has, with CNBC, a big staff behind him and all the help he needs? I don't. So give me the chance to at least build those. And I want to be through building them by 10, 11 in the morning. So whatever I have, I have. I'm Ira Epstein. I hope to see you all there tomorrow. You have a great evening. Take care.